Ever thought about how financial management could change your life? Well, you're not alone. Today, we're going to explore the power of investing and saving and how understanding these two key concepts can revolutionize your finances. But what exactly are investing and saving? Saving is rather simple. It involves setting aside a portion of your income for future use. Think of it like storing your earnings in a piggy bank, only this time it's a bank account that slowly grows with interest. Investing, however, is like planting a magic bean. You put your money into various assets such as stocks, bonds, real estate, and anticipate that over time these will grow into a fruitful money tree. Get ready as we dig deeper, unveiling the pros and cons of both techniques and guiding you to make the most of your hard-earned money. So, why do people save? Let's unpack the benefits and drawbacks. People save for many reasons, and one of the biggest pros is safety. When you save, you're putting your money into a bank account where it's protected by federal insurance. You're not rolling the dice on stocks or bonds, so your principal is safe. Another pro is liquidity. Savings accounts allow you to access your money anytime you need it. This makes saving a good strategy for short-term goals, like buying a new car or taking that dream vacation. But saving has its downsides too. The biggest con is the relatively low returns. Banks offer minimal interest on savings accounts, so your money doesn't grow much over time. Another downside is inflation. As the cost of goods and services rise, the purchasing power of your savings diminishes. Your money may be safe, but it's slowly losing value. While saving provides safety, it may not be the best route for long-term financial growth. But what about investing? Investing might seem daunting, but it can be a game changer. Let's explore why. Investing has the potential to offer higher returns over the long term compared to saving. While savings accounts provide a steady but low return, investing in assets like stocks, bonds, or real estate can potentially yield much higher returns. This is due to the fact that you're putting your money to work in businesses and ventures that have the potential to grow significantly over time. Then there's the power of compounding. Albert Einstein once called compound interest the eighth wonder of the world. When you invest, the returns you earn on your investments can be reinvested, and then those returns can earn more returns. It's a snowball effect that can lead to impressive growth over the long term. But like all good things, investing comes with its share of downsides. First up is the risk factor. Investments can go down as well as up. You could lose some or even all of your initial investment. This risk can be managed to some extent by diversifying your investments, but it can never be entirely eliminated. Another drawback is the need for financial knowledge. Investing is not a set-and-forget strategy. It requires time, effort, and a good understanding of financial markets. It's not something to be entered into lightly or without doing your homework. Investing can be a powerful tool for wealth creation, but it comes with its risks. So where does this leave us? Investing and saving both have their merits, but where should you put your money? Well, the answer is not as black and white as you might think. It's not about choosing one over the other, rather it's about striking a balance between the two based on your unique circumstances. The choice between investing and saving hangs on three crucial factors: your financial goals, your risk tolerance, and your time horizon. Let's start with your financial goals. Are you saving for a short-term goal like a vacation, or are you looking at long-term goals like retirement or buying a home? If it's the former, saving could be your best bet, but if it's the latter, investing might be the way to go. Next, consider your risk tolerance. How comfortable are you with the idea of losing some or maybe all of your money? If the mere thought makes you uneasy, sticking to saving might be the way forward. On the other hand, if you're willing to take on some risk for the potential of greater returns, investing could be your ticket. Lastly, your time horizon. Simply put, how much time do you have? If your goal is coming up soon, saving is safer. But if you have years or even decades before you need the money, investing can give your funds the chance to grow. Remember, the key to financial success is not just about making money, but also how you manage it. So whether you choose to save or invest, make your money work for you. You might be wondering, why should I prefer investing over saving? After all, saving seems safer, right? Well, while it's true that saving money provides a safety net, investing can offer some unique advantages. First, the potential for higher returns. Yes, investments can be risky, but they can also provide significantly higher returns than most savings accounts. This means that over the long term, your money has the potential to grow more through investing than it would by simply sitting in a savings account. Second, investing can help you beat inflation. Inflation erodes the purchasing power of your money over time, meaning that the $100 bill in your pocket today won't buy as much in 10 years. The returns from investments, however, can outpace inflation, preserving the purchasing power of your money. Lastly, investing is a powerful tool for wealth creation. By investing wisely, you can grow your wealth over time, enabling you to achieve your financial goals, be it buying a house, funding your child's education, or securing a comfortable retirement. While investing does come with risks, the potential benefits can make it a worthwhile endeavor. Remember, the key is to make informed decisions and to invest within your risk tolerance. So, are you ready to make your money work harder for you?